Is Microsoft's multi-trillion-dollar AI empire collapsing? On January 28, 2026, Q2 FY 2026 earnings exposed the truth. Just 15 million paid Copilot seats from 450 million users. 3.3% conversion. Azure growth dipped to 39% from 40%. Shares crashed 7% amid $37.5 billion CapEx fears with no returns. This is Copilot. Launched in 2023, now tanking sales and stalling cloud growth, Wall Street panics. We'll unpack Microsoft's promises, the brutal failures, and risks to your business. Know this now if you use their tools. Microsoft first unveiled Copilot at its Ignite conference in November 2023, positioning it as the game-changing AI companion that would embed intelligence directly into everyday work tools. By early 2024, it hit general availability, seamlessly integrating generative AI capabilities across the Microsoft 365 suite, including Word for drafting, Documents, Excel for data analysis, PowerPoint for presentation creation, Teams for collaboration insights, and Outlook for email management. The company marketed Copilot aggressively as your AI-powered everyday companion, designed to handle everything from automating routine tasks and generating content to analyzing complex datasets and delivering real-time actionable insights, all fueled by advanced OpenAI large language models hosted on Microsoft's Azure cloud infrastructure. At its heart, Copilot operates by taking natural language prompts from users within these familiar applications and processing them through cloud-based AI inference. For instance, in Excel, you could type "create a sales forecast chart from this quarterly revenue data," and it would instantly generate visualizations, formulas, and trend analyses without manual coding. In Outlook, a simple command like "summarize this 50 email thread and flag action items" condenses hours of reading into bullet points. Microsoft repeatedly touted internal studies showing up to 70% time savings on common tasks, framing it as the solution to the modern productivity paradox where workers drown in information overload and repetitive drudgery, yet struggle to focus on high-value work. For enterprises, Copilot is sold strictly as a premium add-on at $30 per user per month, layered on top of existing Microsoft 365, E3, or E5 subscriptions, with the clear goal of transforming organizations into AI-native powerhouses that embed intelligent automation into every workflow for boosted efficiency, faster decision-making, and accelerated innovation. Azure forms the critical backbone of this entire vision. As Microsoft's flagship cloud platform, it provides the massive computational horsepower, think sprawling GPU clusters and hyperscale data centers, required to run the heavy inference workloads for Copilot's models at planet-scale volumes. During earnings calls, CEO Satya Nadella described it as building a planet-scale AI factory where relentless Azure expansion would not only power Copilot, but also enable customers to scale their own AI services to millions of users. The pitch to businesses was straightforward and seductive. Start with Copilot adoption today to unlock immediate productivity gains. Then leverage Azure's infrastructure tomorrow for custom AI deployments, effectively turning your entire operation into an AI-first enterprise. Microsoft's Q2 FY 2026 results underscored this narrative with total revenue soaring to $81.3 billion. Intelligent Cloud segment at $32.9 billion, up 29% year over year, and Azure plus other cloud services growing 39%, all explicitly tied to surging AI demand. Executives doubled down on the momentum, highlighting how Copilot's integration drives broader ecosystem lock-in, from developer tools like GitHub Copilot to sales-specific agents in Dynamics 365. They projected this flywheel effect would accelerate Azure's dominance in AI workloads, positioning Microsoft as the indispensable partner for the generative AI era. Early pilots and testimonials from Fortune 500 firms were showcased in keynotes, promising a future where AI doesn't just assist, but anticipates and executes on human intent. Independent analysis and leaked internal metrics paint a starkly different picture, one of underwhelming adoption and persistent technical shortcomings that explain the sales tank. As far back as August 2025, reports surfaced of just 8 million active licensed users for Microsoft 365 Copilot, a dismal 1.81% conversion rate from the company's massive base of 440 million Microsoft 365 commercial subscribers. By the January 2026 Q2 earnings, that number had inched up to 15 million paid seats, representing a 160% year-over-year increase in seat additions. Sounds impressive at first glance, but dig deeper, it's still only 3.3% overall adoption, with the growth coming from a rock-bottom starting point. Even Microsoft's boasts of tripling customers with over 35,000 seats couldn't mask the broader failure to penetrate mid-market or smaller enterprises. User feedback and rigorous benchmarks reveal why Copilot consistently underdelivers in real-world scenarios. Independent tests show it generating inaccurate Excel formulas that break on edge cases, hallucinating facts or fabricating data in Word document summaries, and flopping on multimodal tasks like image plus text analysis when stacked against rivals such as Google's Gemini or OpenAI's ChatGPT. Recon Analytics' detailed tracking of the US paid AI market is particularly damning. Copilot's share as users' first-choice tool plummeted 39% from the 18.8% in July 2025 to just 11.5% by January 2026, accompanied by a dismal Net Promoter Score of 19.8 specifically for accuracy. Forums like Reddit's r/Microsoft 365 are filled with threads from data engineers, IT admins, and power users describing it as gimmicky for anything beyond trivial queries, reliable for basic summarization maybe, but unreliable and frustrating for complex enterprise workflows involving proprietary data or nuanced logic. Sales execution tells an even grimmer tale. Internal quotas for Copilot and related AI agents proved so unattainable that fewer than 20% of Microsoft's sales representatives hit their targets, prompting the company to slash those goals by up to 50% across teams. This wasn't a one-off. It reflected widespread customer resistance during pilots, where businesses tested the tool extensively but refused to scale deployments due to shaky ROI calculations. Azure's performance echoes these struggles. Despite a staggering 66% year-over-year jump in capital expenditures to $37.5 billion, primarily for AI infrastructure, the platform's growth decelerated to 39% in Q2 with constant currency, guidance slipping to 37-38% for the next quarter. Management openly admitted ongoing supply constraints for high-end GPUs, yet the bigger issue is demand not converting into outsized AI revenue as promised. Operating margins compressed to 67%, squeezed by the capex frenzy without proportional monetization. Wall Street's reaction was swift and brutal. Shares dropped over 7% in after-hours trading immediately following the earnings release, as analysts fretted over light forward guidance and the risk of billions in sunk infrastructure costs amid cooling AI enthusiasm. You probably assume that pouring tens of billions into capacity guarantees explosive growth, but that's dead wrong here. Recon Analytics notes that licenses don't equal adoption. 44% of provisioned users abandoned Copilot due to distrust in its outputs, leaving Azure's shiny new GPU farms underutilized. Forum-shared experiments drive this home, prompting Copilot for sales pipeline analysis, and Dynamics or Excel often spits out generic, low-fidelity responses requiring extensive human rewriting, eroding any productivity edge. Pilots proliferate, but full-scale rollouts stall as CFOs crunch the numbers and walk away. The competitive landscape adds insult to injury. ChatGPT commands 61% of the paid market, Gemini holds 13% and growing fast, while Copilot shrinks to 14% overall, with workplace access converting at just 35.8%. Even within Microsoft's family, GitHub Copilot reached 4.7 million subscribers, up 75% year over year, highlighting how the consumer/dev-facing tools outperform the enterprise M365 version. This isn't theoretical underperformance. It's a practical faceplant that's eroding enterprise trust and leaving Wall Street questioning the entire AI bet. Regulators zeroed in on Copilot's expansive data practices from the outset, though recent scrutiny has pivoted toward commercial viability amid the adoption slump. Ireland's Data Protection Commission launched a formal investigation in 2024 into OpenAI's data handling for model training, which directly implicated Microsoft's Azure-hosted infrastructure powering Copilot, especially since it processes vast troves of enterprise emails, documents, and chat logs without always providing granular user consent. Core GDPR principles like data minimization, purpose limitation, and transparency are squarely in the crosshairs, as the tool vacuums up proprietary content to fuel its inferences. No blockbuster finds have materialized yet, but ongoing EU competition probes into cloud market dominance raise red flags about Microsoft's bundling of Copilot into Azure ecosystems, potentially stifling rival AI providers. Analysts from Gartner and Forrester documented AI adoption fatigue across their 2025 reports, warning that tools like Copilot introduce acute compliance risks under frameworks like HIPAA for healthcare data mishandling, or EC regulations for erroneous financial disclosures stemming from unverified AI-generated outputs. Digital rights organizations, such as the Electronic Frontier Foundation, have lambasted the deep Azure lock-in, arguing it amplifies breach risks and reduces customer choice in an AI-dependent world. Recon Analytics reinforces this with data showing licenses rarely translate to sticky adoption. 44% of users churn due to fundamental distrust in answer quality. These watchdogs fixate on the proprietary data black hole, trade secrets, customer lists, strategic plans, all fed into models prone to leaks, biases, or regurgitation. For everyday enterprises, this translates to paused rollouts for mandatory compliance audits, further depressing sales figures and prolonging the stall. Consider a sales vice president at a mid-sized firm with 10,000 Microsoft 365 seats kicking off a Copilot pilot for her team. She prompts the tool to analyze confidential client bids pulled from Outlook and Teams conversations, storing sensitive pricing details and negotiation notes in temporary processing caches. If a device falls into the wrong hands during travel or surfaces in a routine e-discovery audit, those details become exposed to competitors, turning a productivity experiment into a trade secret catastrophe. Or imagine a healthcare analytics consultant feeding anonymized patient data sets into Excel Copilot with a query like forecast readmission risks from this hospital volume data. Even with precautions, the prompt could inadvertently reference protected health information in context. And if those AI-generated outputs get shared in reports or meetings without scrubbing, it triggers HIPAA violations, potentially saddling the firm with crippling fines, lost contracts, and eroded client trust. Picture a financial advisor using Word Copilot to draft client reports by synthesizing market data from emails and spreadsheets. The tool hallucinates asset valuations or risk assessments, slipping flawed figures into polished documents that mislead investors and invite SEC investigations or class action lawsuits. Benchmarks confirm this isn't hypothetical. Copilot's error rates run 20-30% higher than rivals on financial tasks, making every output a potential landmine. Marketing teams feel the squeeze too, adopting Copilot for campaign brainstorming only to wade through hours of vague AI slop that demands constant refinement, obliterating promised time savings. Human resources professionals relying on Teams Copilot for performance reviews risk confidential notes leaking during e-discovery processes and internal disputes. Developers using GitHub Copilot face-bloated repositories stuffed with insecure code patterns that trigger compliance audits and security nightmares. Supply chain managers running Excel forecasts see cascading errors from faulty formulas ripple into inventory shortages or overstock disasters. Lawyers prompting Outlook for case summaries miss critical nuances, planting seeds for legal oversights. These scenarios compound into real-world pain, precious time lost double-checking every AI suggestion, budgets drained on training programs for a tool that disappoints, and high-stakes decisions undermined by unreliable intelligence. Grounded in persistent benchmark gaps, the risks hit close to home for anyone touching Microsoft ecosystems, data exposure, regulatory headaches, and sunk costs on underperforming tech. Microsoft finally acknowledged these headwinds during recent earnings discussions. Following Q1 FY 2026 results, they bundled free access to Copilot Chat into base Microsoft 365 plans to juice trial numbers and funnel users toward the full $30 per month paid version. Yet paid seat conversion remains stuck at 3.3%, with executives admitting multiples more free users haven't flipped the script. On the product front, they've pushed iterative updates. November 2025 brought targeted fixes for Excel formula reliability, while December enhancements refined AI agents for sales workflows in Dynamics 365. CEO Satya Nadella publicly committed to reallocating more GPU resources directly to Copilot development teams, emphasizing solving for increased usage scenarios in sales and beyond. They touted marquee wins like Fiserv, ING, and NASA as examples of large deployments exceeding 35,000 seats each. For Azure, the $37.5 billion CapEx surge aims to alleviate GPU supply bottlenecks, with forward guidance pegged at 37-38% growth in constant currency terms. License discounts have surfaced to help sales teams meet revised quotas, though analysts flag this as eroding average revenue per user. Yet core problems fester. Free chat access cannibalizes paid upgrades without driving meaningful conversions. Hallucination mitigation filters continue to falter in independent tests, with Reddit benchmarks consistently showing Copilot trailing Gemini in factual accuracy and depth. Overall adoption stays flat, and the 50% sales target reductions, following 80% of reps missing marks, confirm that Band-Aid fixes haven't addressed the underlying distrust and ROI shortfalls. Azure growth decelerates even amid the spending spree, akin to securing your entire enterprise data trove with nothing more robust than a 4-digit PIN or shared login credentials, simple shared access points that expose Copilot processed files to routine risks. These tweaks treat symptoms while the disease of inconsistent performance rages on. You can take control immediately with straightforward steps, no IT team required for most. First, audit your Microsoft 365 subscriptions. Head to the Admin Center at admin.microsoft.com. Sign in with your work or admin account, then navigate to billing and licenses greater than your products. Scan for any Copilot add-ons listed. If they're sitting unused, select the product details and choose to cancel or suspend to eliminate those $30 per user monthly fees before they accrue further. Next, minimize day-to-day exposure in the apps themselves. Whenever Copilot pops up with a suggestion in Teams, Outlook, or Excel, simply decline it and perform the task manually or with traditional features. This starves the tool of your data. For administrators, dive deeper into the Microsoft 365 Admin Center under Settings, greater than Org, Settings, greater than Copilot, and Toggle. Off any proactive suggestions or integrations to sharply reduce unnecessary data processing across your organization. If you manage Azure resources, log into the Azure portal at portal.azure.com. Go straight to cost management plus billing greater than cost analysis, apply filters for AI services or Copilot-linked workloads, and pause or right-size underutilized virtual machines, storage blobs, or inference endpoints tied to experimental pilots. This directly claws back CAPEX waste. For the advanced user, leverage PowerShell with Microsoft Graph for precise telemetry, install the Microsoft.graph module if needed, run connect-mg graph to authenticate, then execute get-mg report Copilot usage license detail in PowerShell or the Graph Explorer. This pulls detailed usage metrics by user and license type, arming you with data to justify deprovisioning low-value seats to your leadership. These actions reclaim budget/risks and restore control without a full platform migration. Immediate wins for watching this far. Microsoft's Copilot sales tank and Azure growth stall expose the hollow core of trillion-dollar AI hype. Grand promises crumbling under weak adoption and ballooning costs. If this opened your eyes, smash that like button, share with your team or network, and subscribe for more unfiltered tech investigations. Drop a comment. Have you ditched Copilot yet? Let's discuss.